Have housing prices bottomed? Let's have a look. Hello everyone, Florian here and welcome to another episode of HeiseSays. Grab your stein of coffee because, well, I want to look at an article discussing, well, a climb in house prices in March and some arguments that house prices have bottomed. But before we look at that, I want to put an argument to you. I'd like to get your opinion of this idea. Now, we've been covering, sadly, what I've been calling the construction apocalypse for some time. Many builders, particularly those that are focused on residential construction, are going under. They're collapsing. Many houses are being left unfinished, or some not even started. I think you're in a better position if you've just got a block of land where nothing started than when you've got a half-finished house, because there could be work that someone else has to come in and take responsibility for, so that's just an added pain rather than getting a new builder to come in. So, with this in the news nearly every other day, at least every week at the moment, you can check out the playlist at the end of the video for the construction apocalypse. How do you think that might impact the demand for established houses? Rather than people who want to get a home, rather than going out and getting something built, because there's all of this negativity and concern about builders, and there's a risk now. There's a risk. The government allowed them to trade while insolvent. The government juiced up the housing market, just as when you had labor shortages, environmental impacts, and shipping costs skyrocket. So now you've got these builders that have pushed to the wall and are falling over. So the question is the builder you're working with at risk of falling over? How much money are you putting forward? So that's something we have to keep in mind. But here's the point I want to make, or the argument I want to put towards you viewers. If there's a risk with building, are more people going to turn towards established houses? And then will that add additional support to that sector? Think about it. If you're going, okay, we can build, it may take a year or two longer than we thought. The builder could go under. It could be more expensive than when we started. Or we can buy a slightly older house that's there. Okay, sure, we may need to fix her up. It's not perfect, not our dream home, but we can make do. And then when things calm down, we might renovate. Of course, this could be another support level to the residential construction sector. So another support level to the established residential housing market. So the decline in the residential construction sector that we're seeing in the construction apocalypse is also going to, reduce our ability to meet supply. Established houses, demand for it might tick up due to the fear of going with new builds, and then we've got our population increase coming in as well. So let me know your opinion on that one before we have a look at this article, because perhaps that could be playing into the demand for established houses. All of these things are adding support levels to it. So when we can look at wages, we can look at household earnings, individual earnings, compare it to house prices, and we can see how it's just bullshit, how expensive these houses are. But if you compare it to something in the 80s, the houses are bigger, they're more complex. We've got more legislation coming again every year now, or pretty much, driving up the cost of these houses. That's the thing. You've got a whole generation of people who are bitching and moaning they can't get into houses, but they've shaped the political landscape to such an extent that our legislation has changed, which has driven up the cost of housing. Anyway, so let's check this one out. Let me know what you think about that idea while I have a sip of coffee. Great, spilling it everywhere. I've been digging trenches for rebar. We've got a few we had to hand dig that the machine couldn't get to, so I went and bought myself a little tiny demo hammer. You got like a 7-kilo one. Got a little attachment to it because we've got clay. So I need to slice off the clay with it, and it worked wonders. It worked wonders. That's been my day. It's why I'm a bit out of it. So let's check this one out. House prices lift in March according to new data. Home buyers are being warned. There's the FOMO. The cost of a house is set to stop falling despite interest rates sitting at their highest level in a decade. What do you think will happen? Because there's a lot of talk too about the RBA pausing rates this month. What do you think will happen there if they pause rates? Do you think people will see, oh, it's all going to be okay? Jump in, jump in, jump in. So the cost of purchasing a home looks to be back on the rise, at least for the time being, an unwelcome change for those looking to buy a property. The average cost of buying a home in Australia increased by 0.13% in March, with the median value currently $732,000. Now, this is the thing. Are people really trying to time the market with buying a house? Are they honestly trying to time the market? Because it takes so long to go through the process of actually buying a property, particularly if it's established too. How can you time it? It's like trying to time when you're buying and selling shares. You know, how many of the experts, particularly on YouTube and social media, are telling you this fantastic trade they did and they never share all the crappy trades they did? Or it's just luck. I bought a telecommunication company in Canada, and then like a month after it shot right up. You know, because of course I'm a genius. You know, I knew that there was going to be a bid to buy the whole company. It ended up falling through eventually, but I mean it didn't matter. I bought it because it's telecommunications that's never going to go away, and they pay a monthly dividend, so that's why I did it. But it shows you how it's just luck, isn't it? A lot of the time, at least for us normies, and I think for most people who bought houses. House prices have fallen since the Reserve Bank began its campaign to bring inflation back into line in May 2022, causing interest rates to rise for 10 consecutive months. We can see this is the annual change in home prices. Okay, now remember, you're thinking, oh no, look at that. Yeah, but we're coming off a 30% change. What's the Pooh Brown? That's Brisbane, isn't it? That's Brisbane. Is that Hobart? I can't tell. These colors are all the same. They're all the same, these lines. Or I'm colorblind. But these have colors and those don't. Anyway, I'm getting old. In response, Sydney's house price fell by 6% in the past year to sit at an average of $994,000. Melbourne saw a 5.79% drop, with the median home value now $789,000, according to the latest PropTrack Home Price Index. However, March has seen a slight bounce in prices, with Sydney house prices rising by 0.27%, Melbourne by 0.12%, Perth by 0.24%, and Adelaide by 0.1%. Wow. These numbers are tiny. I guess. I mean, what they're looking for, they're trying to catch the bottom. Now the question is it a dead cat bounce? Or is it calming down? Here's the thing. They're going to be some people who are struggling with these interest rates, but then they're going to be other Australians who can manage them no problem. There's such a disparity in the earnings of different households in this country. Where's this depressing chart I like showing here? Hang on. This is this one here. You know, the difference in earnings in households. You got over $2,000, median or the middle income, just under 1,000, and then you've got the adjusted lowest income. We're under just hovering over $400. So yeah, guys, we're not. Australia is not a country where everyone's equal anymore. And the sad thing is, with this continuing increase in housing costs, the ability to use housing to lift up people from one social strata to another is disappearing. And that's kind of sad. Because you'd have people who'd immigrate over from Europe, where it'd be, which we're turning into now. Similar to that. Come over here, start a family, buy a house, buy a holiday house, live like the castle. So, Brisbane, Hobart and Darwin bucked the trend, falling 0.06, 0.43 and 0.1% respectively. Uh-oh. Come on, Hobart, what are you doing? A rate rise drives prices down by reducing the amount of money borrowers are able to get. Demand is being driven upward by increased immigration, higher rent prices, and an uptick in wages growth. A lower number of new listings has also buoyed values according to PropTrack. With inflation rates still much higher than the RBA's 2 to 3% target and unemployment at relatively low levels, the bank may opt for another cash rate hike. But a pause is on the cards, according to PropTrack economist Elaine Krieg. Concerns around inflation expectations remain anchored, and the board's commitment to overcoming the challenge of high inflation make a 25 basis point lift next week more likely than not. But it's a close call, and the end of interest rate rises is in sight, whether the Reserve Bank pauses this month or next, she says. I think that'll be a big psychological impact as well, honestly. If the RBA does lift the cash rate next week by 25 basis points, it will be the 11th consecutive hike, bringing the cash rate to 3.85%, its highest level since April 2012. This would likely be the point at which the RBA pauses its tightening cycle and assesses the impact of the tightening already delivered. However, prices could still take a dip in coming months as the full impact of the rate rise is felt by mortgage holders. In this tightening cycle, with so many borrowers having taken advantage of record low fixed rate mortgages through the COVID period, yet to feel the full impact of rate rises, this is especially the case, she said. Yeah, well, many of the viewers have taken advantage of that too. But I wonder how many of them are old farts like me who, have got an old mortgage and just locked it in to save money. As such, it's expected that consumer spending will slow sharply over the coming months as the lagged impact of rate rises already delivered takes effect. So there we go, everyone. So they've framed this with just a touch of FOMO. That house prices they've lifted in March by very unimpressive amounts. But still let's have a bit of a talk about it. As I said, and I'm starting this video, I suspect the construction apocalypse is going to have some impact on the desire of people to buy established homes as opposed to build new. We'll have to see if that's a significant enough trend to go with these properties. And you also have to remember construction loans are more expensive than established loans. So there you go, guys. Now, is this a sign that the market's bottomed in housing? We won't know until it's passed. We definitely won't know until it's passed. But we're still not at pre-COVID levels. And, property isn't crashing down as many people are hoping. Honestly, I think it's going to... I would not be surprised if we don't get a cash rate hike and if this is a pause in the decline of real estate. But even if we go down another 10%, we're not going to be near that increase that we saw before. So, we're coming off a peak. Anyway, guys, let me know your thoughts and opinions on this one. And would you rather build or would you buy a second-hand house? As always, thanks for watching. Like, share, subscribe to the channel. Check out Heise BIM and Heise Does. And if you're a fan and enjoy the content I create here, there are a few ways you can help out. Wait a minute. Hang on. Wrong button. There we go. You can support us via YouTube or Patreon, use our referral links, buy our pocket squares, or call us if you need an architect. Take care, everyone. Have a great day. And I'll see you all in the next episode of HeiseSays.